And joining me right now is the boss, Citizens Financial Group Chairman and CEO, Bruce Van Saun. Bruce, great to see you.
Yeah, great to see you.
Thank you so much for being here. So is assets under management the growth story here, private managing? Tell me what you're doing and where you see growth at the bank.
Yeah, so one of the big initiatives we took back in 23 when First Republic and Silicon Valley Bank failed was to actually go out and hire 150 people from First Republic to start up our private bank. And that's gone exceptionally well. We've been investing in that. We now have up to about 500 people. We have over 13 billion in deposits. We're tracking to 7 billion in loans and 10 billion of assets under management. We're doing a lot of wealth lift outs. We're announcing our 10th this week, so a lot of people want to come work on this platform. So we're aiming to fill the void where First Republic dominated, kind of serving successful people and high net worth individuals and successful businesses.
Well, this is a big deal, and we've seen the success of people like UBS and Morgan Stanley and JP Morgan with their private bank. Is that where you're going for?
Well, what's really interesting for us is that we think we can initiate something called One Citizens, where our corporate bank can complement the private bank, so we can help successful people in their business endeavors as well as in their personal investing needs and financial planning needs. So going into these markets like New York, we have a strong corporate banking team working with our private bankers. Many of the competitors aren't able to do that. They're too siloed, and so we're at the size where we can work together and really know the customers and bring total solutions.
Well, I mean, look, if you're looking at the private bank being one of the growth stories, how do you get scale there? Do you acquire assets under management?
We do some of that through the lift outs, but part of it is just bring the talent in and keep adding to the talent, because many of the customers are very loyal to those bankers. And they see that shifting this from First Republic over to Citizens, we can do a lot more for those customers. And so we just keep adding people, and we're bringing customers over at a very consistent clip. We're probably adding 1,500 new client relationships every quarter. And that, it started with some of the folks that didn't want to stay at JP Morgan, but now it's broadening out to new customer generation through the Citizens Network.
That's very good. I mean, look, Bruce, most people will say that we're expecting more consolidation in the banking sector. When you look at the mid-tier banks versus some of the Wall Street giants, we've got a chart of the KBW NASDAQ Bank Index versus the regional banks. I want to get your take really on what happens here, because everybody's expecting bank consolidation. The question is, are you going to be a buyer or a seller?
So I don't know if we'll do anything in the short term, because right now we have a huge momentum. We've grown our earnings year over year 15%. As you said, the stock's up 25%. I think we'll probably double that earnings growth next year, and the stock should really run. So I'm really focused on driving that organic growth, making sure the private bank works. Our push into New York is working really well. Our commercial bank is now demonstrating that what we've assembled to serve middle market companies and serve private capital is gaining a lot of traction. When activity levels were subdued over the last 3 years, you couldn't really see the gem that we've created. Now that activity levels are picking up in the third quarter, we had our second best capital markets quarter ever, and I think you're going to continue to see that happen.
And we had a great market, of course, which was, of course, very helpful for that very strong performance. You also had stronger fee income as a result of the capital market. So what about that fee income? What can you do with that now that you're looking at even further opportunity for growth, and how do you get costs down in the middle of all of that?
Yeah, well, the fee income has been a series of investments in the commercial bank, in the wealth management space, in payments, and I think we're set to see growth. We launched a new card complex that'll bring in fees, so we feel good about the fees. The other side of the equation is really, how do you take the next slug out of your cost base? And we've been really good at this over a number of years. We've had annual TOP programs, Tapping Our Potential, where we try to take out 100 to 150 million of costs every year. We've announced something called Reimagine the Bank, which is a little bit of a tease. It sounds sexy. What are they going to do to reimagine the bank? But I'm pushing my people to think, with all the new tools, all the AI, how can we look out 3 years and say there's ways to run the bank much differently and more effectively, taking advantage of these tools? And I think it's really important, if you fall behind in this arms race to actually deploy these new technologies, your customer experience won't keep up with where the pack is going. So we want to be on the cutting edge, on the vanguard of all of that.
And you said this reimagine the bank idea will actually cut infrastructure costs.
Yes.
By 10 to 15%. It'll include an AI software development using agentic AI for complaints, call centers, quality control, much more. Bruce, is that one of your efforts to get costs down? Will that AI is obviously replacing some jobs.
Yeah. So, I think it'll help on the cost side. The other thing is, though, it really helps on the customer experience side. We want to offer more self-service options, smoother experience, not have people get passed around the bank. I can't solve the problem, so I'll have to pass you over to Sally in this department.
Yeah.
When that happens, your customer experience, your customer satisfaction goes way down. So using these tools, customers should get very quick resolution to their issues, and they'll be much happier, and then they'll stay with the bank longer. So that creates revenue lift as well.
Well, you're right, and I've been there, right? I mean, you're on the phone, I end up hanging up when, But you said you're going to reimagine the bank, and you're going to give us more details in January, but the net benefits will be in 2027. What happens in 26 for expenses?
Well, in 26, expenses will go down, but when you start a program, you have certain investment costs. So we're not going to break those out. We just said net, that should be a push. We should be able to cover those one-time startup costs with some benefits. And then in the second year, the costs start to go down and the benefits start to expand. So you start to see the pull-through on that in 27. And in 28, it really takes off. So we did a program 3-4 years ago that we targeted $400 million in savings. And we've already said that this program, when it reaches maturity, should be at least that number.
Well, we talked yesterday with the chairman of the Securities and Exchange Commission, Paul Atkins, and he talked a lot about tokenization in terms of where financial services is going. What do you think about all of this, tokenization and some of these new ideas in terms of digital assets?
Yeah, I'd say we're at a very exciting time. So not only are bank management's teams dealing with AI, but now stable coins and tokenization. There's so much innovation, and it's so rapid. Keeping up with that is really a full-time job. But I do think there's some good use cases for stable coins. I think tokenization is something that all banks are investing in, and will be able to create more frictionless experiences in terms of buying and selling and creating loans and deposits. And so we're looking into it and investing in it. And we'll see where it goes. All
right, let me take you back to just pure vanilla banking and the lending environment right now. What are you seeing from the consumer? What can you tell us about the macro story?
I feel good about the macro story. So we had a bumpy first half of the year. The Trump administration was implementing some new policies. Tariffs in particular created a lot of uncertainty. I think we're in a new normal where uncertainty is always going to be present, and you just have to deal with it and figure out how you're going to operate. So second half of the year, we've seen things really start to pick up again. The deal pipeline is very active. That'll extend into 2026. And I think we should see GDP growth 2 to 2.5%. We should see inflation maybe peak at 3%, come back down to 2.5%. We should see unemployment go no higher than 4.5%. So I think the fundamental macro looks pretty good as we look out into 2026.
Would you expect that we see an acceleration next year because of the big beautiful bill and some of the things that are coming out of that?
That's part of the reasons we have optimism that those things were kind of second stage after the tariffs, but the big beautiful bill, the deregulatory push, the pro-energy orientation of the administration, all those things are positive. The other thing that's kind of a big tailwind has been the AI spend and the amount of investments that's occurring in AI. That's probably adding at least a 0.5 percentage point to GDP growth in the U.S.
Yeah, I mean, for sure. When you're talking about all that money, I'm just waiting for the return on investment from the trillions and trillions of dollars that has gone into this space. Bruce, congratulations to you. It's your 12th year anniversary leading Citizens Financial. Tell me what you've seen. We just talked to Paul Atkins about what has changed at the New York Stock Exchange, and boy, a lot has changed. What about in the 12 years that you've been at the helm here at Citizens? It's
been a great journey. We've taken the orphan of a foreign bank and turned it into a leading super regional bank, and I've done it with great people. So, it's really been a pleasure to be part of this. And, I would say the basics in banking of taking great care of your customers, really knowing them and providing good service and good advice, That never changes. Like, that's what you've got to capture, and there'll be a lot of different ways to do that with new technologies, but stay focused on serving your communities, serving your customer base, making them successful. If you keep to that, you'll be successful.
I'll tell you, we talk all day long about interest rates and whether or not rates are going to come down, but I never see deposit rates go up.
Well, they went up when rates went up, so
Okay.
you got some benefit. But now the Fed's cutting, so they're going to come back down.
Yeah.
So banks have to be really adept at that. There's a lot of competition out there for deposits, and we try to give our customers a fair shake, but also we need to bring that down so then we can pass those lower funding costs on to our borrowers.
Yeah. And when you've got stories like the Dell family putting $6.25 billion into the Trump accounts for children and kids having, 401ks for kids, you got to believe that the stock market and investing and your plan for private are
think
spot on.
The stock market still has room to run. People worry that it's overvalued, but we're at a flex point with all this AI spend that's going to cascade in and through the entire set of companies, and they're going to get a boost in productivity, and it's going to be good.
Don't forget about the $8 trillion in money market accounts.
Yeah.
Then there's that. Bruce, it's great to see you.
Okay, likewise.
Thank you so much.